$3,200. That is what the IRS took from Gary's first IRA withdrawal. He was 66 years old. He pulled $18,000 from his traditional IRA to cover a gap in his first retirement year. The check that arrived was $14,800. He sat at his kitchen table and assumed the math was right. It wasn't. Most of it came back eventually. But Gary spent 4 months not knowing that. He didn't sleep well those 4 months. The day you stop working, the tax system does not stop working. It just stops working for you. When you were employed, your employer handled your withholding. Every payday, automatically. The moment you retire, that system ends. No one sends you a letter explaining what replaces it. The IRS does not ring to tell you what changed. There are 8 things the IRS expects you to do the moment you retire. None of them will arrive in a letter. I spent close to 3 decades working inside the federal tax system. Compliance units, notices, transcripts, penalty calculations, cases where ordinary people had done nothing wrong and still ended up owing money they didn't expect to owe. After I retired from federal service, I started volunteering at tax assistance sites, VITA and TCE. I sat across from people in their 60s and 70s who had paid into the system their entire working lives and walked into retirement not knowing any of what I'm about to tell you. I am not on the payroll anymore, which means I can finally say some things I wasn't allowed to say before. Point 1. Set up your withholding across every income source, or you will pay for the silence. When you worked, your employer's W-4 handled your withholding automatically. The moment you retire, that form disappears. Your retirement income arrives with no withholding unless you set it up yourself. And every source requires a separate form. And here's the bit nobody explains. Social Security requires Form W-4V, filed with the Social Security Administration. You choose 7%, 10%, 12%, or 22% withheld. It does not happen automatically. Regular pension payments require Form W-4P, filed with your plan administrator. One-time IRA withdrawals require Form W-4R. The default withholding on those is only 10%, which may be far below your actual tax rate once all your retirement income is added together. Patricia is 64. She takes a $22,000 IRA withdrawal. Only $2,200 is withheld. Her pension income pushes her effective rate much higher. She says, "I thought the automatic amount covered it." Come April, she owes $2,600 she did not plan for. The dental work gets postponed. Don't be Patricia. Go to IRS.gov and search Tax Withholding Estimator. Enter every income source. It is free and takes 15 minutes. Then file W-4V with SSA, W-4P with your pension payer, and W-4R with your IRA custodian before any withdrawal. Point 2. Set up your IRS online account. Before you need it, most retirees have never opened their IRS Individual Online Account because their employer handled all the paperwork. In retirement, you are managing it yourself. And here's the bit nobody explains. Your IRS online account gives you access to your tax transcripts, payment history, every notice the IRS has sent you, your prior year adjusted gross income, and downloadable tax documents, including 1099s and W-2 records. You can make payments, set up payment plans, and verify your withholding records all in one place. Frank is 68. He gets an IRS notice in March. He has no online account. He waits 4 to 7 minutes on hold. By the time he speaks to someone, he has the wrong year's return in front of him. He says, "I thought there would be more time." The deadline was 30 days from the notice date. He had already used 12 of them. Don't be frank. Point 3. Social Security does not start itself. You have to claim it. This is the single biggest broken assumption I see. Retirees stop working, they wait, they check the mail. The check does not come because they never applied. And here's the bit nobody explains. Social Security retirement benefits are claimed, not paid. You apply online at ssa.gov, by phone or in person. Apply up to 4 months before the month you want payments to begin. If you miss your full retirement age and forget to claim, retroactive payments go back a maximum of 6 months, and only if you are already past full retirement age. You can claim as early as 62 with a permanent reduction of up to 30%. Waiting until 70 earns roughly 8% more per year past full retirement age. After 70, waiting adds nothing. Call SSA and say this: I would like to begin my Social Security retirement benefit application and confirm the earliest date my payments can start. Important state note: 9 states currently tax Social Security benefits at the state level. Check your state's rules separately. Point 4. Your Social Security is probably taxable, and nobody calculates it for you. More than half of all Social Security recipients pay federal income tax on at least part of their benefits. Most did not know that was possible before their first retirement tax bill arrived. And here's the bit nobody explains. The IRS uses the number called combined income, your adjusted gross income, plus any tax-exempt interest, plus 50% of your annual Social Security benefit. For single filers in 2026, above $25,000, up to 50% of your benefit is taxable. Above $34,000, up to 85% is taxable. For married filing jointly, those thresholds are $32,000 and $44,000. These numbers have not changed since 1984 and 1993. Benefits rise with inflation every year. The thresholds stay fixed. More retirees cross them automatically without doing anything different. Susan is 71. Social Security of $22,000, pension of $14,000. Combined income already at $37,000. She takes an $8,000 IRA withdrawal for a water heater. Combined income moves to $45,000. Now $8,700 of her Social Security is federally taxable. She says, but I paid into it my whole life. She did. And the IRS still taxes it. Don't be Susan without a plan. Pull your last return. Add your AGI plus tax-exempt interest plus 50% of your Social Security. That is your combined income. Go to irs.gov and search Publication 9015 for the official worksheet. Point 5. Your first IRA withdrawal will be overtaxed, and you have to ask for the refund. This is what happened to Gary, and it happens to thousands of retirees every year. Your financial institution often does not have your correct tax information when you take your first distribution. They apply a default rate, 10% for most one-time IRA withdrawals, 20% for certain 401k rollovers. If your actual tax liability is lower, you overpaid. The IRS will not reach out. The refund is yours to claim at filing. And here's the bit nobody explains. The IRS processes tens of millions of dollars in retirement withholding refunds every quarter. That is only the money from people who knew to claim it. The people who did not simply lost it. You correct the overpayment on your annual Form 1040. If it happened in a prior year and you missed it, you may be able to file an amended return on Form 1040X within 3 years of the original filing deadline. Before any IRA withdrawal, contact your custodian and ask, what is the default federal withholding rate on this distribution, and how do I file a Form W-4R to adjust it? Set it close to your actual rate before the money moves. Point 6. Required minimum distributions begin at 73, missing one costs 25%. If you have a traditional IRA, 401k, 403b, or most other tax-deferred accounts, the IRS requires minimum annual withdrawals beginning at age 73. The penalty for missing one is 25% of the amount you were supposed to take. And here's the bit nobody explains. Your financial institution is not legally required to ensure you take your RMD. And there is a timing trap that catches first-timers constantly. If you turn 73 this year, you technically have until April 1 of next year to take your first RMD. But if you wait until April 1, you must also take your second RMD by December 31 of that same year. 2 taxable distributions in one calendar year, which can push your combined income over the Social Security taxation threshold and into a higher Medicare premium bracket simultaneously. The calculation: take your December 34 prior year account balance, divide by the IRS life expectancy factor for your age from publication 590B. At age 73, the factor is 26.5. A $500,000 IRA produces an RMD of approximately $18,168. If you miss one, take the distribution immediately and file Form 5329. If corrected within 2 years, the penalty drops to 10%. Robert is 74. He assumed his financial institution would pull the RMD automatically. They sent a notice. It sat in a pile for 6 weeks. He missed December 31st. He says, "I thought more paperwork was coming before anything was due." Don't be Robert. Go to irs.gov and search Required Minimum Distributions. Confirm your deadline this week. Point 7. Your Medicare premiums are based on 2-year-old income, and you can appeal. Most retirees do not know Medicare surcharges exist until the first premium bill arrives, and it is far higher than expected. And here's the bit nobody explains. The surcharge is called Income-Related Monthly Adjustment Amount. In 2026, the standard Medicare Part B premium is $202.90 per month. If your modified adjusted gross income exceeds $109,000 as a single filer, or $218,000 married filing jointly, a surcharge is added. At the first tier, the premium becomes $284.10. At the highest tier, size $189.90 per person per month, Medicare does not use your current income. It uses your MAGI from 2 years ago. Your 2026 premiums are based on your 2024 tax return. If 2024 was your last full working year and your income has since dropped significantly, you are overpaying based on income you no longer have. But you can appeal. The SSA form is SSA 44. It exists specifically for people whose income dropped due to a qualifying life event, retirement included. File it with documentation of your retirement and your current income. Margaret is 67. She retired in January 2025. Her 2024 income was $145,000, a full working year. Her 2026 Medicare premiums reflect that. She and her husband pay $900 more per month than the standard rate. She says, "I didn't know I could contest it." She could. Don't be Margaret. Pull your 2024 tax return, find line 11 plus line 2A. Compare to the IRMAA thresholds. If you qualify for an appeal, go to ssa.gov and search SSA 44. Point 8. The IRS has a penalty relief program, and they do not advertise it. Last year, the IRS removed more than $1 billion in penalties from individual taxpayers after those taxpayers asked. Most of the people who qualified never asked. They did not know the program existed. And here's the bit nobody explains. It is called first-time abatement. If you have no penalties in the 3 tax years before the one being penalized, you have filed all required returns, and you have paid or arranged to pay the tax owed, you likely qualify for abatement of failure to file and failure to pay penalties. No hardship required. Clean record and a willingness to ask. Call the toll-free number on the upper right of your IRS notice. Have the notice, the tax year, your filing status, and your Social Security number ready. Say this: I am calling about the penalty on this notice for tax year XX. I would like to request first-time abatement. My compliance history is clean, and I have filed all required returns. If the phone call does not resolve it, file Form 843, claim for refund and request for abatement. Available at irs.gov. Not available in most tax software. Mail it to the IRS Service Center listed in the Form 843 instructions. If you already paid a penalty and believe you qualified for abatement, you generally have 3 years from the payment date to request a refund through the same form. James is 70. First late filing of his life, 3 weeks late. Penalty, $940. He paid it the same day. He says, I assumed I had no choice. He did have a choice. He qualified. He just did not know. Don't be James. 8 things. 8 directions. None of them in a letter. The system runs on what you ask for, not on what you're owed. Set up your IRS online account. File your withholding forms before the first check arrives. Apply for Social Security. It will not start itself. Calculate your combined income and find out how much of your benefit is taxable. Before any IRA withdrawal, ask about the withholding rate and file your W-4R. Confirm your RMD deadlines and do not let December 31st pass without taking the right amount. Check your 2024 MAGI against the IRMAA thresholds and file SSA 44 if you qualify. If you have an IRS penalty and a clean prior record, call the number on the notice and ask for first-time abatement. That $3,200 Gary lost from his first withdrawal, most of it came back. But it cost him 4 months of worry he should never have had. These are not loopholes. They are the rules. The IRS just does not explain them. Take care of yourselves and take care of your paperwork. I am a retired federal tax employee, not your tax advisor. Nothing here is personal tax, legal, financial, or investment advice. Tax rules change and your individual facts matter. Before you act, speak with a qualified CPA, enrolled agent, tax attorney, or financial advisor. For unresolved IRS problems, look into the Taxpayer Advocate Service. If you qualify based on income, also check VITA, TCE, or a low-income taxpayer clinic near you.